Hi students, in the last class we saw the input output methods. Okay, so now in this session we will see the pricing material issue. Okay, so this is one of the techniques to stock control. So this pricing material issue in this, so there are three methods are there. So first one is a FIFO method, second one is a LIFO method, and third one is the average weighted method. Okay, so now we will see the first one is what's the first in first out. Okay, so in shortcut way it is called as what's the FIFO. It is the abbreviation. Okay, so FIFO means what's the first in first out. Okay, so now see what do you mean by this FIFO method under this pricing material issue. So see here under FIFO means what, under this method materials received first are issued first. After the first lot of materials purchased is over or exhausted, the next lot is taken up for issue. Okay, so it means what, just see here methods material received first are issued first. It means what, so whatever the material is taken in the manufacturing company. Okay, so in a manufacturing company whatever the raw material first taken, so first that is issued first for the production purpose. Okay, and after exhausted or after finished that stock, they are taken what's next lot or the next raw materials for the issue purpose. Okay, so this is the first in first out. Okay, so whatever they are receiving the first, so for the whatever they are receiving the first lot of the raw material, so these raw materials issuing the first or they are transferring for the first for the production purpose. Okay, so it is nothing but the first in first out. Okay, so now so this is the format. Just see what is the format of the store ledger account. It means what's for the FIFO accounts, how to prepare this. Okay, so the name of materials, whatever may be the X material, Y material, Z material, or the ABC material. Okay, so code number of these materials you have to put. Next, what's the maximum stock, what's the minimum stock, what's the ordering quantity, what's the reorder label. Okay, so whatever the information is given, then you have to put, but you have to write as it is name of material, code numbers, maximum stock, minimum stock, ordering quantity, reorder label. If it is the information is given, then you have to put in front of this head. Okay, so next this is the, you have to draw the tables. So tables, the date column you have to draw, GR number column you have to draw, the receipt column. In that receipt column you have to put draw the three columns, quantity columns, rate column, amount column. Again the issue column, in that again the issue column they have to put the three columns. What is that, quantity column, rate column, amount column. And next one is the balance column. Again in this balance column you have to draw the three columns, which is the quantity, rate and amount, and the last one is the stock verifications. Okay, so this is the format to solve the problems on the FIFO as well as the LIFO as well as the average material. Okay, so you needed to draw this format. Okay, so now we will see problems on the FIFO. FIFO means what, the first in first out. Okay, so whatever they are taking the first, so out of that they have to transfer for the production purpose. Okay, so this is the FIFO. Now see the problem number 1. Prepare the store ledger accounts from the following information, pricing the issue under the FIFO method. Okay, so the problem is given, so information is given. So when they are going to receive, it means what they are, when they are ordered, and when they are issued, on which date, how much quantity is there, on which rate they purchased or they received from the vendors. Okay, so this is the date column, this is the quantity column, or this is the rate column. Okay, so the information is given, the problem is given. Okay, so up to this the problem is there. Just see on the date, just see this much only. Okay, so the date on 1st January 2013 receipt. It means what, the raw material received from the vendor. So how many quantities? 300 quantities are there. Okay, at the rate 8 rupees per unit. Okay, so now how to put this in this format? So in this date column you have to put here date 1/1/2013. If it is GR number given, then you have put, otherwise make it dash. Okay, So it is related to the, there are two columns, receipts column and the issue column. Okay, so now this information is related toward the receipts. It means what? So these receipts 300 quantities we have to put in this receipts column. Okay, so date 1/1/2013. If it is given the GR number, then put here, otherwise make it dash. In the receipt columns, how many quantity they are purchasing? 300 quantity at the rate of 8 per unit. Make it total amount. Okay, so amount will be 2400. Okay, so 8 into 300, 200, 400. In the issue column, they make it dash. On this date, on 1st January 2013, there is a no issued. Okay, there is not transferred for the manufacturing group. Okay, so as it is, this 300 will be the balance. Okay, 300 at the rate of 8, amount will be 2400. Okay, so like this we have to solve. Okay, so this is the risk issued for on 5th January 2013, issued 140. Okay, so how much were the balance? It's a 300 is the balance. Out of this 300, they issued 140 for the manufacturing in the issue column. Okay, put here date 5 January 2013. Okay, if the GR number given date, make it dash because it is not related to the issued. It is not related to the receipts, but it is related to the issued. So make it into 140. Out of this 300 balance, 140 at the rate of 8, make it balance. Okay, and here in again we have to record the balance. It means what? Here 300 is what? 300 earlier balance is what? 300. Out of this 300, they minus the 140. The remaining 160 have to record in our balance. Okay, just see here. We will solve the problem directly. Okay, now see, on 1/1/2013, the receipt, the 300 units are received in the manufacturing company at the rate of 8 per unit. Okay, so now see, like this we have to draw store ledger accounts. FIFO methods, we have to write the name of the materials. Name is not given, as well as the code is not given. Maximum stock level is not given. Minimum stock is not given. Ordering quantity is not given. Okay, so now we will see the directly solve. Okay, so this is the format. Date column, GR column. In a receipt there are 3 columns: quantity, rate, amount. In the issue column, again there are 3 columns: quantity, rate, amount. In the balance, 3 columns: quantity, rate, amount columns. Okay, so now see, on 1st January 2013, they what's the, it is a receipt. Okay, so they are recording the receipt column. Okay, date, the quantity, how many quantity they received? 300 quantity receipts at the rate of 8, and the amount will be the 2400. How it came the 2400? 300 into 8 rupees 2400. Okay, so on this date they are not issued, so make it dash dash dash. In the balance is remaining as it is, will be the remaining 300 at balance quantity at the rate of 8, amount will be 2400. Okay, so now see, in the next date, on 5th January 2000, issued 140 units. Okay, issued 140 units. Okay, so now see, on 5th January 2013, so it is not related to the receipts, make it dash dash dash, make it issue. So how many quantities issued? 140 out of the balance. Okay, so this is the first lot taken. Out of this first lot, they have to send first. Okay, they have to send first. Okay, so it means 300 out of this 300, 140 issued, 140 transferred units for the production purpose at the rate of 8. Amount will be the 1120. Okay, so now see, balance we have to record. So now how its balance came? So now see, out of this 300, they issued 140. It means what? Remaining will be the, out of first lot, remaining again still remaining 160 units. Okay, 160 units at the rate of 8, 1280. Is it clear? Okay, so now see, on next date. Okay, so now it's closed here. Okay, so in the next date, just see here on the next date, on 7 January 2013, again receipts 200 units at the rate of 8.20 per unit. Okay, so it means what? Again this 7 January, they received, okay, they purchased the raw material. How many units? 200 units at the rate of 8.20 per unit. Okay, so now see, on this 7 January 2013, they received 200 unit quantity as the rate of 8.20. The amount will be the 1640. Okay, so on this date there is not issue. Okay, but this earlier stock, first of all we have to take. Okay, so this earlier stock here closed on this date. On this date, on 7/1/2013 it's the remaining. Okay, so this is the earlier stock, it is the first stock. Okay, so as it is we have to record 160 at the rate of 8 1280. So on this date again we purchased this also we have to maintain 200 at the rate of 8.20 1640. Okay, so now this is the finished on this date related to this 7th date. Okay, next month is also on 8th January 2013 again they issued, okay, 60 units. How many units? 60 units. Okay, so now see on this 7th the balance is what earlier in the first, from the first lot 160 units are there, and the second lot will be the 200, and we are using the FIFO method. FIFO method means what's the first in first out. Okay, whatever the first lot is there, from that we have to issue. It means what, on this 8th January 2013 we have to issue first. Okay, so these 60 units we have to issue from this 160 units at the rate of 8. Okay, so 60 into 8 rupees 480. Okay, again we have to maintain on this date, we have to maintain what, stock. Now what's remaining stock from this earlier stock 60 units issued, it means remains 100 units. Okay, at the rate of 8, the balance will be, the amount will be the 800. So this 200, this is the second lot, as it is we have to maintain this second also 200 at the rate 200. So 200 at the rate of 820, balance it was the 1640. Is it clear? Okay, so like this we have to solve. Next, on the next date, just see here, 15th January 2013 receives 250 units at the rate of 7.90 per unit. Okay, 7.90 per unit, as well as on 15th January 2013 issued 120 units. Okay, 120 units. Okay, so now see, they in the 15th January 2013 they received also as well as they issued also. Okay, so now first of all we will make the transactions, issued transactions. Okay, so see here on 15th January 2013, so they received 250 at the rate of 7.90 and the now total amount is what, 1975. Okay, as well as how many units they issued, 120 units issued. Okay, so on this unit, on this 8th, how many balance is there, 100 lot is there as well as the 200 lot is there. Out of this we have to issue how many units, 120 units we have to issue. Okay, so first lot just finished. First of all, first lots, this 100, just see issued on this 15 100 units at the rate of 8, the total balance is the 800. Still 20 units we have to issue, right? Still 20 units we have to issue. Okay, so this 100 is finished. Now second lot is remained. Okay, so this will be the first lot now. Okay, so out of this 200 units, still we have to take 20 units. Just take here 20 units at the rate of 8.20. 8.20, the total will be, the amount will be the 164. Okay, again on this date we have to maintain what's the record. Okay, right? So in the earlier date the 100 was there as well as the 200 stock is there, but this 100 is finished and from this 220 units are the finished. Okay, so remaining is what, 180 units remain at the rate of 8.20, as well as on this date, so the manufacturing company purchased 250 units. Okay, so 250 units, as it is we have to put here 250 units at the rate of 7.90. Okay, so this remaining is the total amount will be the 1975. Okay, so this finished. Okay, so on this 15th January 2015, what's the stock remaining? First plot is what's 180 units at the rate of 8.20. Second lot is what's 250 units at the rate of 7.90 units. Okay, so if it is issued in the next date, then first of all we have to take from this 180 units. Okay, first lot. Okay, so next one is after the 15, on the 18 issued 2 tens. Okay, issued 2 tens, it means on this 18 there is a, now see here, actually how many units we have to issue, 210 units we have to issue, right? 210. Okay, so the in the earlier 182 days 180 units are there. Okay, so take it is 180, first lot 180 issued at the rate of 820, amount will be the 1475. Still we have to take the 30 units, right? So this second lot is again there, so from this second lot you have to take the 30 units, take it 30 units at the rate of 7.90, the amount will be the 1580, right? Okay, so again on this date we have to maintain the we have to maintain the balance. Okay, so on this, in the earlier date 180 units we took, as well as from this 250 units we took 30 units. The remaining will be the 220 units at the rate of 790. The total amount will be the 1738. Okay, so on this date it is finished. Next month is yours. On 22 January 2013 issued 200 units. Okay, again issued 2200 units. Okay, so on 22, so see here, so the balance remains in the earlier date 220 units. Out of these 220 units we have to issue on 22 January 200 units. At the rate of 7.90, the amount will be the 1580, and the remaining will be the 20. Okay, so 220 minus 200, remaining will be the 20 on this date. Okay, so on the next date 23rd January 2013, it is a receipts. Okay, on 23rd January 2013, receipts 400 units at the rate of 7.50 per unit. Okay, so on this 23rd January 2013, 400 units they purchased at the rate of 750, 3000 total will be the. Okay, so again whatever the remaining earlier date we have to maintain on this date also. Just here 20.20 the quantity, as well as the rate is 7.90, and rate, total rate is 158. Okay, and as well as this also we have to maintain 400 at the rate of 7.90, the balance will be the 300. Okay, so next on 25th January 2015, what's happened? It is the 25th January 2015, it is issued 150 units. Okay, so now see on this 25th January 2013, so first of all, what's the remaining first stock is what's 20, take it 20 at the rate of 790, the total will be the 158. Okay, still it means total 150 we have to take. Okay, so 20 taken, out of this 400 we have to take again 130 units. So take it 130 units at the rate of 7.50, the total will be, the amount will be the 975. Okay, so again we have to maintain the record. So from this this 220 units we finished. Okay, out of this 400 we used the 130 units. Okay, the remaining will be the 270 units at the rate of 750. The total amount will be the 2025. Okay, so on this next date 28 January 2013, they purchased, they received 200 units at the rate of 7.70. The amount will be the 1540. Okay, again we have to maintain the records. The earlier date there were the 270 quantities at the rate of 750, at the rate of 750, amount will be the 2025. So on this date we purchased again, so make it maintain 200 at the rate of 750, but 1540. Okay, and the next day means 29th January 2013, again issued. Okay, what again issued on 29th January 2013, again issued how many units? 240 units. Okay, but earlier stock were 270. Out of this 270 we issued 240 units at the rate of 7.4050. Total balance will be the 1800. Again we have to maintain the balance. Now see, out of this 270 we use the 240, again 30 units still with balance. Okay, so 30 at the rate of 750, 225 is the amount, and as it is this 200 also remaining, 200 7.50, it's a 1540. Okay, so like this you have to solve the problem. Okay, first in first out, whatever we purchased the first, out of that you have to sell the first, or you have to transfer the first for the manufacturing purpose. Okay, so like this we have to solve the problem. Hope you will be understand. If you not understand, just please contact me or message me. I will explain you at any time. Okay, or anyways I will explain, so please contact me. Okay, so just try to understand, it's very easy. Okay, it's very easy. Okay, so thank you.